Hey guys, in this video, we're going to talk about RSI. Now, RSI stands for Relative Strength Index. And what it does is that it actually puts into a nice little chart here. You can see this red area here. This is our RSI. It puts into a nice little chart and puts into perspective the strength or weaknesses of a stock over a certain number of days. So it goes by the close of each day, and it goes by what just a certain period of time. So the typical usual what everybody uses RSI 14, right? So 14-day time frame, and it's just measured on a scale from 0 to 100. So you can see here 0 to 100, and then what we're usually looking for is going to be overbought or oversold. Now, how do we know that? Oversold is going to be anything under 30, and then overbought is going to be anything over 70. So you notice when we do these YouTube videos every night, we always mention the RSI. We talk about the stochastics. We usually use those in tandem, but really RSI just gives you a quick little easy way to see if the stock is overbought, oversold, and then it kind of identifies momentum and what could happen in a recent trend and going forward. So you'll notice here on this chart, HFC on the daily, you can see that we've got really overbought here. Our RSI up here in the 90s. All right. So you can see that we are way up here, had a nice little pullback here. But the interesting thing is, even though RSI went back down to 80, we still had a nice move up here. So sometimes it's not exactly perfect. Just because something's above 70 doesn't mean it's going to immediately come down. Obviously, as you can see, it finally did come back down and the RSI went back down. But still, if you were short here just because the RSI said 80, obviously there was like a $5 move here that went against you before it started to come back down. But as you can see here, if we click on this little area right here, RSI 24, you can see there's a dip in here, and then boom, immediately climbed back up, and then your RSI went up with it. So a lot of times we'll mention RSI neutral or something like that. That just means it's in between 30 and 70. It's 50, 60, 40, somewhere in there. So right now this would be considered neutral, and you can't really play the stock just based on RSI at 44. Obviously, we want to see it work our way back up to the 70s. We want to be overbought in here because we're nice and tight. We want to see a nice little pop. But again, you just don't really know, because if you're just playing strictly the RSI, nothing else, you don't really know what's going to happen. This is only based off a 14-day period, etc. So again, basically keep it simple. Oversold is going to be considered anything below 30. Overbought is going to be considered anything over 70. And then just kind of use that in tandem, right? So it's an oscillator. You're supposed to be used in tandem with your other technical analysis, your moving averages, stochastics, etc. So again, that's all it is. Just below 30 is oversold, and then above 70 is considered overbought. All right, guys, thanks for watching. Make sure to check us out on social media. We have attached the links to our socials in the description, and we also have a trading service if you're interested. There's more information in the description below.